Okay, good afternoon, everybody. Welcome to the Making Money Trading Stocks, Options, and ETFs. This is Dennis Wilborn. I want to welcome everybody. I hope you're having a great week so far. Markets has been kind of a little bit all over the place, a little bit up, a little bit down, reacting to the Fed, reacting to the Supreme Court nomination. Although the reaction there was kind of muted, but it seemed like everybody was paying attention to what was going on yesterday, and it basically like business came to a halt, and things really slowed down a lot. And so, let's see. I want to remind everybody that all materials presented are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is not an indication nor a promise for future performance. And so in case you're watching the video of this, here's a little bit about me and what I've been doing. The motto of active trend trading, of course, is to clarify, simplify, so that, give us a better chance of multiplying our accounts. So our objective of this session is to provide about a 10 to 15 minute webinar, just real quick, just before the close on Friday, every Friday, to provide timely, actionable intel review at the end of the week. So market review. What are we looking at? We're moving into, today marks one, the end of the month, the end of the quarter. This is, oh gosh, I think we wound up, we wound up last month also where, well, it wasn't the end of the quarter, but the end of the month came on a Friday. And that can bring some additional volatilities. Occasionally, we can also find entities selling off into the close. We'll see if that takes place today. But one of the big things that I am waiting for and want to be, and I will be moving on, moving into Q4 of 2018, is waiting for those year-end setups. Those year-end setups that we all want to be taking a look at. Turn this on. There I am. Hi guys. So I really want to be taking a look at, okay, what are we watching from a seasonality standpoint? We know that seasonality-wise, a couple of things didn't work for us this year so far, and that was, of course, gold for the move that we expect in the July into early August standpoint. Didn't work. So does that mean we throw out all the information and, oh gosh, never trust seasonality again? No, we just accept the fact that seasonality is a tendency for particular times a year for entities to catch a bid and move in the proper direction. So we'll take a look at real quick at stocks, ETF performance, any bonus trades that we're waiting on. We're waiting on right now. Didn't find a lot, but we'll take a look at a couple of trades here shortly. Okay, basically, here's where we're sitting as of about 9 o'clock this morning. We're up 24% for the year. I'm working towards getting that pushed up towards the 16% level. Or no, I'm not 16, but an additional 16%, so that we'll come out at the end of the year about 40%. That's my target for the end of the year. Let's take a real quick look at a couple of entities. What are we seeing from? And also, as you're doing your review over the weekend, also take a look at. Where'd it go? There we go. I'm going to move it over here. Okay. Always, also take a look at this chart. Now, why this chart? It basically is the end of the month. And so what that marks is the candlestick, whatever the candlestick is for the end of the month, it's complete now. And we can use the candlestick if it's a signal to, make some judgments about what may be taken on through the end, through into the next quarter. And so as we see right here, SPYs, the monthly, looks like it's going to finish up as kind of a little doji at a level of, just above support. But a doji typically is an indecision candle. Monthly wise, what else are we looking at? Well, negative divergence on the TSI. On the weekly, also negative divergence on the TSI. So we could potentially see just a resting in place or a somewhat of a pullback for the spiders. What would be an interesting place for it to pull back to? Probably about the 280 level. Looking here on the monthly chart, 280 level, good levels of support. That's where it broke out of before. And how much of a, if it pulled back to 280, how much of a retracement would that actually be? Well, let's see here. There we go. Okay, how much of a retracement would that be from the highs? It would be approximately about a little bit over 4% retracement, which is not anything to be, freaked out about or anything like that, but it is enough to say, hey, that would be something that I would like to wait for, because it would really lend itself well to our setups going into the end of the year, for the end of the year rally that we anticipate. So again, over the weekend, on the entities that you're watching, if you're watching just the active trend trading, Magnificent 7, the stocks that we follow, that's Magnificent 7 ETFs, the stocks we're following, if that's where you limit your weekend research to, please take a look at also what is it reflecting on the monthly chart. Okay, back to the weekly daily. As we see, spiders, it's sitting right up on top of the 20. TSI sitting right on the 0 line. What has it done previously? When it's hit that 0 line and it's hit the 20, it's rebounded. So in reality, this is a nice little pullback. Is this the end of year pullback? My opinion is no, it's not. But again, the market's going to do what the market's going to do. My opinion is, hey, we're going to get a stronger pullback back. What I would like to see is a pullback back towards this 34 or the 50, and then a bounce higher from there. So that's all we got on the SPYs. What about the Qs, are representing the NASDAQ composite? So very, very, no, there we go. A little bit different. It's, as you can see, it's away from the moving averages. So it did pop up. However, it has some overhead resistance. The overhead ceiling is about 186.46. Couldn't break up through that. So kind of ran out of gas there. As you can see here, momentum on the TSI, a little bit waning. In other words, really flat slope. So there's not a lot of momentum going in, but it's also something that we would expect for a September. September tend to be, for lack of a better term, the September tends to be worst performing month of the year. But also a good setup month going into the October, November, December timeframe. Like the S&P, I define an area somewhere. I would like to see a pullback down here into the 34-day moving average down to the 50. So about 181 about 181.50 to 182.50. Excellent place to look at for potential getting into a new trade. And I would swing that over into getting into a new trade on TQQ, the 3-time leverage ETF for the NASDAQ composite. Let's look at IWM. IWM was looking a little bit weaker than the other entities on a daily chart, on a weekly chart, I'm sorry. Nice little flag moving down, and it's basically this week has moved from the upside of the flag, back down to the downside of the flag, and down here to the bottom. Looks like it's wanting to finish up more towards the lower level of the channel. If it in fact does that, takes that level out, it could very rapidly go down to 166 or even 164 and start a rebound from there. I'm more excited about the IWM and QQQ than the spiders. And again, it goes back simply to here's what has happened in the past. The tendency, the seasonality of IWM and also the NASDAQ composite is that they tend to rebound more during the year-end rally than the S&P. So we'll keep our eye on that. Do we have a signal yet, for IWM? And the answer to that is, if price action closes where they are on a daily basis, the answer is yes, we do have a signal. It would be a bullish engulfing of yesterday's little spinning top doji. Do we have a TSI turning over at, below the -42 level? No, but it is finding support where we like to look, around the -25 level. It's done that 1-2 different times now. And again, if we close where we're at, it doesn't, we would have what would be considered a bullish engulfing on yesterday's candlestick. Do we have a reversal on the weekly chart? The answer to that is no, we don't. In fact, what we could say on the weekly chart is the weekly chart looks like it still wants to do a little bit of downtrend. So where might it wind up? Well, in the past, it has found support. As you can see, it's past the positive 25 level. It's found support right here on the 0 line. Where does it look, like if we just project a straight line down from these TSIs, where does it look like it might bottom? Well, right about there, which is 10-15. That 10-15 time frame has not changed in multiple weeks of taking a look at the specifics on IWM. So I'm still shooting for, I'm still keeping that in my hip pocket, saying around 10-15, around October 15th. In other words, 2 weeks from now, we may and I'll be looking for what kind of additional information am I getting on that. I'll be looking for. I would like to see some kind of reversal signal or level of support shown on the weekly chart. Where might it be by that time? Well, we can project this. Project this trend line down, and you can see that right there on 10-15. Price action at the lower level of the channel would be about 165. 165. Flip that over to TNA. And we can actually project down a similar type. Excuse me just a second. I have to sneeze. Well. That's better. If we basically project down a similar type line, we can just basically take a parallel line here, and we just hit the tops of these candlesticks right here, and project it. Whoops, we want it to go the other way. There we go. About like that. Okay, if we project on down to about the 15th, where is it likely to go on this? About $85 on the 3-time leverage. And then if we bounce from there, we can measure back up to a 1, 2, 3 extension, or even 100% extension, which would take us up to about a 13-14% run in that time frame going into the end of the year. Hopefully we'd see a little bit more than that, but that's what we're looking at for IWM. I'll throw out another stock. Just keep your eye on this. We, of course, have been trading this with active trend trading on our strategy 3 trade. It is Tesla. Of course, Tesla, you're probably, if you follow Tesla, if you live in the Bay Area, you follow Tesla. And what happened? Well, last night, the Justice Department, our FCC, came out and said, guess what? Elon Musk, here's a subpoena. We're gonna basically we think you've broken the law in some of your texting. We don't care if you're trying to show off to your girlfriend or not by showing her how big your stock price could be. We are going to basically prosecute you for insider trading and making improper statements. Yeah, amazing. Yeah, where did it drop to? Right to the Laura Keltner channel. You're absolutely right, Eric. It's amazing how those things work, huh? And so what did we get? You know, and I want to talk about this just real briefly, and then we're going to wrap up because I don't want to go too long. But what happened with Tesla? We know that Tesla has been going through a lot of junk over the past year. We had a big sell-off from 380, came down, dropped through the 8-day moving, the 50-day moving average, below the 100, the 200-day moving average, did a recovery. This rally attempt here got nowhere near going up back here to these past highs. Where did it stop? Stopped literally at the 50 and the 34-day moving average together. Let's blow this up a little bit. Let's try to blow this up a little bit. Okay, come on. There we go. As you can see, right up there. I mean, and you had this jumbled mess of moving averages, which I call when you get these combined moving averages, those make typically 4 exceptionally strong levels of either support and or resistance. So it comes up here, hits it, does a shooting star, rolls back over, falls out of the sky. So then it makes its next rally up. Now this is a heck of a rally, guys. I mean, comes up down here. It fell all the way to 252, and it rallied back up here to, the past high. It rallied up almost 25%. But where did it rally up to? Well, it did get past the 50, which would normally be a bullish sign. However, since the 50, the 34, the 8, and the 20 are below the 100 and 200, the 100 and 200 acted as the level of resistance. So this is really a classic move. Now, unfortunately, we had no signal saying, candlestick signal saying, hey, get short here. And we had no way of, knowing this was going to happen. However, some folks will go ahead and take a bounce off of the moving averages. And surely that would have been a good trade down to the downside. The volatility on Tesla is starting to really ramp up. And so Tesla may give us a lot of new surprises going into the end of the year. Let's just take a real quick look over here at there we go. Yeah, here we go. I love it. Here's Tesla, long term. Look at how the momentum's been slowly just draining out of this over the past. This is since July of last year, after it had that really nice ramp up. Kind of just, moved along, and then finally the momentum starts to drain out of it, both on market forecast, down here on the regular momentum, and the momentum going down here is now below 0. Therefore, that's an indication that I'm in a downtrend. And so as we look at this, look what we have. If Tesla breaks right there out of the bottom of this level here, which turns out to be, let's blow this up real quick. There we go. About $250. If we break and close below $250, where's Tesla likely to go? Well, we can just basically lay there's your high. There's your low. Grab that mark. Activate it. Move it down to 250 if we can. There we go. Move it down to 250. You can see I'm using a lot of bandwidth here. There we go. That's close. We're gonna call that close enough. Where is that? Where is that likely to take price action? Wow, that could take Tesla. Not gonna go all in one one fell swoop, but down here to about 102, 105, well, 110, about 110. Let's blow this up back up a little bit. And as you can see, you know, that's back into a level of support. So, yeah, Joe, absolutely right. Joe indicated, thinks that perception with Musk will be a big issue going forward. Yeah, without a doubt, without a doubt. And so anyway, that's what I'm looking at Tesla. That's when, so we're keeping an eye on that. Again, as you can see, it's continuing to melt down a little bit. TSI daily chart rolled over. TSI weekly chart is below the zero line. Looks like it wants to fall a little bit more. So the line of support, somewhere between 254 and 250. 250. So I'm going to blank that out. I'm going to go back over here to the slides and just run through the rest of these really quickly. Here's where we're sitting as of actually the end of the month now, September. Up 24. I'm going to be focusing really hard. If you're not a premium member yet, please, I encourage you to look at becoming a premium member. We've got some stuff coming out in October that's going to be really knock your socks off for premium members. But I'm going to be focused really hard on strategy 1, strategy 2 to get those more back up in par with what we're doing for strategy 3. It's been a wild year trying to do strategy 3 this year. I think we did a little bit over 100% of strategy 3 last year. And 37% is nothing to, to be ashamed of. It's just, normally in strategy 3 we do better. The P&L. This is for both closed and residual value on open entities. And as you can see, we're tracking up, paralleling where I want to be for the end of the year. But I need to accelerate going into October, November, December to hit my 40% by the end of the year. As you know, for premium members, you will get your go, no-go table at the end of the week. I hope that, I tell you what, if you are utilizing, having some success with the go, no-go table, please drop me a note on that. And also, I'm collecting stories. If anybody is a premium member who is, doing some really good trades or finding some good trades, utilizes the system, please drop me a note and let me know how your trading has gone so far in 2018, excuse me. So far our cash flow, August we did a cash flow a little bit over $4,000 for strategy 3. This month, a little bit of a slow month, about $1,000 for that. 258 we brought in on BABA, and we just launched and sent out our alerts to our members, our premium members on BABA, and also we just did BABA. I don't think we did Spiders or Tesla yet, but we did both a strategy 2 and 3 trade. So as a reminder, here's what I'm waiting for. Basically, I'm waiting for the end of the year rally. This is what the Russell tends to do. In October, it finds a floor and then launches off the floor. What does the next one? Well, let me move that over a little bit. There we go. This is the floor that gold tends to hit end of October timeframe, in this November timeframe. At plus what we've talked about. This did not happen for gold this year for several reasons. And so we'll see if we get that surge into the end of the year with gold. Dollar's been just really, really strong. Let's see, BAM meeting will be a webinar. We'll be talking about the last of the fatal flaws of trading and how to fix them. And then, of course, if you're premium members, please tune in on Technical Training Week and more. One of the things we do on the Wednesday night is if we have a trade, and I think we set up a trade this past Wednesday night on for everybody. And so, you know, if you're premium members, please tune into the live session if you can. But if you can't make it, you do get the recording. But sometimes the recording isn't posted until the first thing the next morning. And then the last thing here is other enhancement, conversion to market action points. For the early warning alerts, I'm really pleased with what we've been finding as we've gone back and done some back testing. The maps is eliminating a couple of different things. One, it's reducing the amount of whipsaw that we have on our strong signals, plus it will be giving secondary signals or minor signals that will allow us to actually stay in trades longer. And so I'm really pleased with that. And then some occasional trades back down to the downside, trading the inverse leverage ETF. So, okay, my friends, so we look forward. We are pushing back into the fourth quarter of 2018. So keep your focus, keep growing your egg, trade wisely and profitably. And here's where you can contact me. Let me get to a question here. Would you expect a dead cat bounce with Tesla? Eric, that's a great question. I would think that when it hits that, you know, in that 250 to 255, maybe 260 level, you may see a dead cat bounce. But where would it bounce to? Well, look for it to bounce back up in the moving averages. If it does bounce, that would be a positive for Tesla. However, you know, if it doesn't bounce and just blows right through it, that'd be a positive for those of us who would like to, you know, make some more down to the downside with Tesla. So, we'll be back in about a half hour for the premium members. Next final hour. So until next week, have a great weekend. Aloha. Trade well and prosper. My wife and I are finishing up our remodel on our bathroom, downstairs bathroom, before Brandon and the grandkids get here next week. And so I'll be putting sinks in and toilets in and all that kind of stuff. And so having some fun with that. Anyway, hey everybody, have a great rest of the weekend. God bless. Enjoy the Ryder Cup if you like golf, or if not, enjoy the college football. And have a wonderful, wonderful week going forward. So aloha. God bless everybody.